Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Vivek Iyer. Vivek, good afternoon. It's a red-looking screen, though flattish on the benchmarks. Midcaps are the ones which are sulking a lot more today.
That's right. Good afternoon, Sonal. Good to see you. First thing that we see as far as today's trading session is concerned, the kind of volatility, especially in the last hour, you've actually seen in the broader end of the markets a significant amount of volatility, and the FMCG pack today is taking it on the chin. But we have a lot lined up on the show, so let's start off with the top headlines. Nifty and Sensex see little change amid uncertainty over a trade deal with the USA before the July 9th tariff deadline. PSU banks gain while financial services and FMCG drag. Mid-cap slip on profit booking.
NMDC's price cut due to weak global prices and onset of monsoon comes into effect from today. Stock trades lower.
The Anand Group plans to consolidate all its auto and related businesses under Gabriel India, widening its berth of offerings to help drive synergies and expand its relationship with customers. The combination via a share swap gets a thumbs up from investors.
IDFC First Bank shares gain after Investec upgrades the stock to a buy rating with a target price of 90 rupees. The brokerage says bank's earnings per share growth trajectory is compelling.
Listings galore at D Street this Tuesday. Globe Civil lists at 90 rupees versus its issue price of 71. Ellen Barry Industrial Gases lists at 486 versus its issue price of 400. The management tells CNBC-TV18 that the EBITDA margin may move higher to above 40% in FY27, while Mumbai realty giant Kalpataru lists flat.
Okay, those are the top headlines. We'll discuss individual stocks in just a bit, but we've been talking about the volatility in the markets. So while it's the mid-cap index, which is in the red, Nifty is quite flat with some positive bias right now. 15 points uptick on the Nifty. We have the Bank Nifty, which after seeing a cut has come back into the green. So Bank Nifty should also come for you on the screen. It is up 140 points. And the mid-cap index, that one is down around 230 points. There you go. Nifty Bank is actually at the day's high as we speak. A lot of individual components that we've been talking about, and those are the segments in the focus as well. So yesterday Nifty PSU banking index was doing well. That continues to be the case today as well. And we have the CPSE basket also, which tends to do well. So this recovery has come in on the back of the PSU banking space, and a lot of individual names which are moving around.
That's right. But what's actually transpired, especially in the last hour or so, has been the continued sell-off that we've seen, especially as far as the consumer pack is concerned. Some of the names like United Spirits near the day's lowest points. Another stock that's seen quite a bit of a sell-off in the last 15-20 minutes has been BSE. But these stocks, along with a whole host of other names, is what Hormaz has on his list as he takes us through our special segment, Mid-Cap Movers.
Well, Tuesday, and it brings along with itself its fair share of volatility, as it more often than not does, and it's showing up in the broader markets as well. But for now, the mid-cap index being in the red, so we'll start off with the losers then in the broader markets. There are plenty of them. Coromandel International is one of them, is the top loser on the Nifty 500 in today's trading session. Home First Finance, PTC, Go Digit, you can see all of these stocks currently at the lowest point of the day. Coromandel is now down 7% as we speak. So quite a few losses coming in for the broader markets. There were some other newsmakers in today's trading session, but before that, of course, the newsmakers, of course, are the new listings as well. Look at Ellen Barry, 33% higher from issue price. Globe Civil as well, a similar quantum. Kalpataru listed at its IPO price, trading with gains of around 3.5%, and Raymond Realty now 5% lower compared to the discovered price as well. Now we move to the other newsmakers of the day, and most of them reacting to some brokerage commentary. Dixon, after the downgrade that has come in, a second one in the last 2 weeks, and IDFC First Bank after an upgrade that came in from Investec today, almost 6% higher. But of course, the stock of the day, Gabriel India, on the news flow of the group consolidation, 20% higher on that stock. Volume buzzers then, look at Blue Dart, look at HBL, look at these names, and you would wonder whether the mid-cap index is actually in the red, but it is, with some gains on very strong volumes of 5 to 10%. And lastly, some pocket that has been in the news, stocks that are at new highs. Karur Vysya Bank, Laurus Labs and NACL Industries are making new highs in today's trading session. Back to you guys.
Okay, all right. Thank you so much, Hormaz, for joining us as always and taking us through those mid-cap movers. Let's welcome Shrikant Chauhan of Kotak Securities for a technical check on the markets. Shrikant, good afternoon. Thank you so much for joining in. Tell us, what are the next important levels to watch out for on the Nifty?
Yeah, good afternoon, Sunil. Good afternoon, Vivek and everyone. See, for Nifty, it is very clear that it is right now consolidating after rallying to the levels of 25,650, 750, where the market is having good amount of resistance. In case if there is any correction, then close to 25,450, 400, the market is having excellent support. And there we should look for taking some contra bet of going long in this market. So buying on dips should be the strategy instead of buying at current levels, or let the market cross the level of 25,750. I think till then, we are going to see some stock-specific activity in this market.
Well, Srikanth, that's your index view. Any individual stock trading calls you have for the day?
Yeah, number of stocks are buzzing today. In fact, a few PSU banks and a few those banks which are very close to their important breakout levels, like RBL Bank. After a very long time, it has crossed the level of 250. It was around 700 levels in the year 2018. From there, all the way it fell to 150 levels. And now again, it is coming back. It is very close to its important resistance level of 265, 270. But while looking at its entire setup, I'm of the view that the stock is heading for at least 300 in next maybe few weeks. So it's a buy at current levels around 255, 256 levels. With a stop loss, if there is any short-term view, then keep a stop loss at 247. But if there is a medium to long-term view, then just hold on to it. Minimum 300, 310 looks achievable in the near term for the RBL Bank. The other stock which we like is Vedanta. And there also we have a bullish view. It is around 462, 465. Based on its technical formation, the stock is heading for the levels of at least 490. But on the dismissal of 490, the stock may even move towards 530. Broadly, all these metal stocks, especially related to minerals and minings, they are doing well.
All right, so watching out for these names. Thank you so much for joining in, Srikanth, with those picks. With that, we'll take your leave. But remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Welcome back. You're still tuned into Mid-Cap Radar. Well, we have been talking about a lot of sectors in focus. Chemical stocks, so the chemical space is in focus. There was a conference, specialty chemicals conference held by Nuvama, and there are three top takeaways from that particular one. Number one is that the government has initiated anti-dumping duty investigations on a number of products, number of chemicals. The names will come up for you on the screen, be it fluoroelastomers, be it paranitrotoluene, paratertiary butyl phenol, beta-naphthol, and methyl acetoacetate. Some of the chemical companies which will be in focus, if this does come through, they will benefit from this. So something like Gujarat Fluorochemicals, there will be Aarti Industries, Deepak Nitrite, Vinati Organics, Sudarshan Chemicals. There's a long list of likely beneficiaries from this particular anti-dumping duty that could come by. So the street is watching out for that one. Number two, on the agrochemical space itself, we've been talking about how this space has been under a lot of pressure, pricing pressure, demand pressure, and MNCs are expecting that to continue as well. They are looking at single-digit volume growth guidance for crop protection chemicals and also indicating muted pricing trends. So MNC chemical and agrochemical companies, they're still very cautious about 2025 and 2026. They're expected it to reverse in 2024, but that hasn't come about. Lastly, H acid, which is a key dye intermediate, that has run into short supply in China. And this has led to increase in prices of H acid and reactive dyes as well. They expect prices to improve in the transient period, and it could benefit companies like Bodal Chemicals, Kiri Industries, also Atul Limited, because it makes reactive dyes. So it could be just for a short period of time, but there are supply issues happening globally, and that could be beneficial for some of these Indian chemical players.
Well, thank you so much. Some good news finally coming as far as that particular chemical space is concerned after a while. But one stock that's under a bit of pressure today is NMDC. This is post announcing a price cut. Nigel joins in with more details.
NMDC has gone ahead and cut prices effective today, and they've cut prices by 600 rupees and 500 rupees on lumps as well as fines respectively. The revised pricing comes up for you on the screen as well. The street was sniffing this, but remember this is the second straight month where we're seeing a price cut. In the month of June, the quantum was far smaller, around 150 rupees per ton. So that's followed up with a 500 to 600 rupee price cut. And this quantum is a little bit disappointing because in the monsoon season, you're bracing for a price cut. But such a large price cut of 500 to 600 rupees, that's a little bit disappointing. Well, what could the reasons be? Globally, remember, Chinese demand hasn't been great. And when Chinese steel demand isn't great, that's what puts excess supply into the market. So global pricing itself has been under pressure. And here in India, we have the monsoon season. So a lot of steel mills, they take maintenance shutdowns and the likes. So because of that, demand domestically as well will be a little bit softish. Put everything together, the street is disappointed by the quantum of this price cut in the month of July.
Thank you so much for joining us with those details, Nigel. But let's talk about IDFC First Bank, buzzing in trade. Nimish highlighted the stock in the morning as his standout brokerage report of the day. Let's revisit this particular stock with him.
So Investec has today upgraded the stock to a buy from hold, and they've sharply raised the target price to 90. Now, Investec note says that they see IDFC Bank delivering a 29% core PPOP CAGR over FY25 to FY28, and that will be aided by 80 basis point reduction in the cost to asset. This combined with a 90 basis point decline in credit cost, that would mean that IDFC First Bank can report an ROA of close to 1.4% by FY28 versus 0.5% in FY25. So that's going to be a big jump as far as the ROA is concerned. Also, the operating leverage is playing out at the bank level, though it's not visible in the numbers, but they believe that this is now quite visible. It should be quite visible and can play out over the next few quarters. Also, the note says that the IDFC Bank's core EPS growth is quite compelling. So on back of all this, an upgrade to a buy on IDFC Bank, First Bank stock, and Investec has now raised the target price to 90 rupees.
Well, thank you so much for joining in and telling us about IDFC First Bank, one of the top gainers as far as the mid-cap private banks are concerned. And, along with it, there's been a positive rub-off effect even on some of the other names like RBL Bank and even AU Small Finance Bank, all of them doing quite well in the session today. But as we now slip into a short break, here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back to Midcap Radar. Well, earlier today, JSW Paints spoke to the press about their plans to acquire AkzoNobel India. Mangalam joins in with the key takeaways.
There were a couple of key takeaways that one got from the JSW Paints and AkzoNobel India press conference. The most important one, how does JSW go ahead and fund this deal, to which Parth Jindal did say a third of which will be coming in from their own group's internal accruals, another third would be tied up from banks, and the other third for which they have multiple private equity partners, of which they are going to soon select one. Importantly, the combined revenue, the decorative revenue of the group would be 3,700 crore rupees, which they believe can immediately scale to 6,000 crores once the merger is consummated. And then their next target would be doubling their revenue and thereafter taking it to 10,000 crores in the next 2 to 3 years. Aspirationally, they are looking at the number 3 spot in the paint industry immediately, the decorative side, and industrial, of which they are number 2 in the country right now. They will target to place themselves at the number 1 mark itself. In terms of the cost synergies, the immediate synergy that would come by would be 350 basis points of the royalty savings that would take place on account of this deal. And over and above that, Parth Jindal did mention that there would be some savings on procurement, logistics, as well as some capacity utilization. Leadership will remain with, they haven't specifically commented, but indications are Rajiv Rajgopal of AkzoNobel India continues to stay on as the leader of the combined entity. Once the merger does go through, while it is premature to talk about whether, JSW Paints will reverse merge into AkzoNobel India as per Parth Jindal, that option is definitely not off the table. So these were a bunch of takeaways that we got from JSW Paints, which aspires to be number 3 quickly and perhaps looking at number 2 at some point as well.
The funding is a mix of internal accruals, leverage at JSW Paints, as well as getting some support from financial creditors through private equity. And we have tied up the entire funding for not only the open offer, but also the stake sale. In terms of our targets, I think we become the second largest player in industrial coatings after this coming together. And in decorative, we become a close, very, very close number 4 player with number 3 very close to our grasp. I think it would be a bit premature to set any targets. We obviously still need Competition Commission of India approval and other regulatory approvals to come in. But I think the power of JSW and Dulux and coming together, I think no target is insurmountable. And unlike others, we have a profitable business. We don't need to burn our way through getting to the numbers that we need to reach.
Okay, that is the word coming in from JSW Paints. It's time to turn our attention to new listings today. Shares of Raymond Realty down in trade after a listing which was lower than the discovered price today. My colleague Rachna spoke to Raymond Group Chairman Gautam Singhania on their real estate and engineering businesses and the company's 20% margin threshold decision. Listen in.
So I think each business is now independently listed. Our lifestyle is independent, real estate is independent. We're talking about real estate. So real estate is net cash on its balance sheet. So it's got enough firepower to take on new projects and execute. And each business has its own strategy. So I think we're in a very comfortable space today.
You've often spoken about this Raymond 2.0. Like I said, you've gone from being known as a complete man to now a conglomerate that goes definitely beyond, as the tagline rightly says. If you could take us through this three-pronged strategy. One is, of course, real estate. And now that we are here at the listing of it, how does real estate drive in the change that you're trying to bring in with this 2.0 strategy?
No, see, we were a lifestyle company. We had a small engineering business, and each business has grown. So the engineering has grown. We bought many engineering last year, so that we got aerospace, defense that added to that portfolio. And we had historical land in the company in 2019. And we said, should we sell it? Should we not sell it? Should we develop it? And I think the decision to develop it was a tough one at that time, but we took it head on.
Right. Like you said, the Pitin sort of inspired you to get into it. And would it be wrong to say that you've carried that spirit forward now that when you've made it clear that minimum 20% margin threshold is what you're looking for, otherwise you'll walk away from the deal? Is that the spirit that you carry forward?
See, we put very strong financial parameters into the business. We corporatize this business. We're a corporate. It runs with a top-class board. And there are certain guidelines. Now, everybody's in business to make money. We're going to do it with our financial discipline. And I believe that if you do this business with financial discipline, you will succeed. So far, it's held us good, and I just don't see any reason why it shouldn't hold us good in moving forward.
We saw lifestyle, of course. That's a very big part of the group, and we've seen it all our lives. Now real estate. And like you said, engineering is a very small part of it now, but moving forward, what's the outlook with engineering?
See, we have engineering as 3 parts of the business. We have the old engineering files business, we've got the auto component business, we have the aerospace and defense business. Each has its own growth strategy. The files is always going to be a slow 4, 5, 6% growth. Auto can grow at 10%, but the exponential growth will come from aerospace and defense. I think there's a huge opportunity for India on the aerospace and defense side. Maharashtra is also coming up with the aerospace defense corridor. And Make in India program with Modi ji has been very successful.
Well, that was Gautam Singhania talking on the sidelines of the Raymond Realty listing. But in yet another new listing, it was a strong debut for Ellenberry Industrial Gases. The shares listed at a 23% premium to its issue price. Earlier today, we spoke to the management to discuss their future plans and more. Let's listen in.
I think as we grow, we get operational leverage, and we would expect margins to, in fact, edge even higher and sort of hit an EBITDA margin number which could be even upwards of 40%. Once a new capacity comes in, so FY27 would be a better indicator. Yeah, we do become net debt free, and in terms of turnover, just to guide, we were doing about 300 plus crores of turnover based on a capacity of about 600 tons per day. We expect our capacity to go up to north of 2,000 tons per day. So, if you extrapolate those numbers, we would see strong revenue growth going forward. So we were at 600. Currently, we are running at 1,370 tons per day and looking to expand this to about 2,200 tons a day. So, yes, the revenue potential from here is significantly higher.
Well, that was the management of the newest kid on the block, Ellen Barry, and that particular stock doing quite well for itself. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.